Hello, and welcome back to the Sovren FX YouTube channel. How are you guys doing? So today we have three important US economic data releases. We have the CPI month on month, the CPI year on year, then we have the core CPI. So let's quickly go over what I'm expecting on gold. Okay, so let me check my audio. Give me a minute. Let me check my audio. Okay, so hello and welcome back to the Sovren FX YouTube channel. We're gonna start off by looking at our analysis on gold. So as you can see, gold is giving us a short-term pullback during the sales to tap 1939 areas. But let us first handle the elephant in the room, which is the CPI, and what we're expecting to happen during CPI. Okay, so let us look at the calendar. So the annual inflation rate of US is likely slowed to 3.1% in June of 2023, which would mark a 12th consecutive month of falls and the lowest reading since March 21. So the slowdown is partly due to a high base effect from last year when a surge in energy and food prices pushed the headline inflation rates to highs of 9.1%. Okay, so also the rent inflation is likely slowed while prices for used cars are expected to fall. So on a monthly basis, the June CPI is projected to increase by 0.3%, significantly higher than the 0.1% during May. Okay, so meanwhile, the core inflation, so we have the core inflation. Meanwhile, the core inflation is expected to decrease to 5%, the lowest since November 2021 from 5.3% in May. Also, the monthly rate is projected to fall to 0.3 from 0.4. Okay, so that is the first piece of analysis we are looking at. And what does that mean for gold and the US dollar? So as you can see on the, let us jump onto the US dollar chart. Quickly change it to a chart you can see clearly. So as you can see, the US dollar falls to the lowest in the last 3 months ahead of the CPI data. So as a gauge of the dollar strength, I think, to me personally, and maybe other investors, this inflation report you're seeing today during CPI, and that's why we are seeing this US dollar fall. This is because this report might reinforce bets that the Federal Reserve is nearing the end of its tightening campaign. So the tightening campaign was actually maintaining a tight monetary policy by increasing the rates and having back-to-back rate hike cycle. So as you can see, it has fallen as much as 0.3% to the weakest since I give the chart a minute to load. So I think it's been the lowest since May, April areas. And so the June figures, we expect them to show consumer price growth decelerated on an annual basis. So that's the CPI year on year, with the headline print likely to have fallen the lowest since March 2021. So we're actually expecting the Fed to reach the end of its rate hiking cycle. Further cooling of US CPI will likely reinforce bearish dollar bets. So What does that mean? During this release, which is in the next 1 hour, if we get a cooler CPI, which is a lower CPI, we're most likely going to see dollar fall all the way to the hundreds. And gold, so let's turn back to our candle chart. So gold, I'm expecting it to break above 1945 before I can enter my buys all the way to 1970s areas. Remember, this might be an impulsive move, and therefore it would be nice for you to sit it out and wait for the next 4-hour candle before you can execute. Just wait for price to show you where it's headed to, then wait for the bottom wick and enter on the pullback. Okay, so that's for gold. If you find out that CPI is way cooler and below the previous CPI readings and the forecast, so we'll wait for breaks above 1945 for entries all the way to 1970s. Of course, this won't take place in 1 hourly candle, maybe towards the next sessions or maybe days. Okay, so the opposite is true, which is if you get high inflation figures, this still shows that the Feds have a lot of work to do, and therefore they're most likely going to keep increasing the rates and tightening the monetary policy. So what does that mean for the dollar? Let us change this to our area chart. So this means that the dollar will regain back its strength and will have to wait for its break above 101,731. So we'll likely see the dollar gain strength, break above 101,800 key levels. And with this dollar strength, what does this mean for gold? So for gold, we're most likely going to see the bearish move down. As usual, we play our entries within the ranges, so we're going to see something in the corridors of, so we'll most likely get a liquidity grab, then impulsively break through the key levels all towards the 1900s, where we've seen that price of gold is failing to break because we have a higher time frame demand zone. So this is the first scenario. I mean, this is the second scenario where we find out that the CPI figures are actually higher than what was forecasted. Okay, so that just means straight sales for gold, but you also have to wait for the price action to take place. Don't just execute blindly. Wait for the liquidity grab, and after the market has cooled down, you can look to get in, take your 30-60 pips for the day traders and your 10-20 pips for the scalpers, then call it a day. We have the PPI reports tomorrow. So as for this week, as we just go over what happened during this week, I've realized that gold is in the second phase of market structure, which is the secondary phase, which is a pullback from the sales, the impulsive sales we had all throughout last week and last month. As you can see, gold is failing to break the 1900 lows. We still have don't forget that gold will always be bullish on the higher time frames because it's a mineral, it's a resource. I mean, it's a metal and it's limited in quantity, therefore it's bound to continue. So we as day traders simply just have to adapt to the phases of market structure. So right now on the high time frame, we're still having the second leg, which is the secondary phase, which are the pullbacks before we have enough liquidity to break towards these highs, and we still don't have enough fundamental confirmations for us to jump back into the bullish bias on gold. So therefore, that's why a lot of us are waiting for the CPI reports today. Okay, so if we break above the, let us drop down to the intraday time frame, the hourly. So if you break above the 1945 pre-planned buy areas, we can look to execute. Also, we need to see pullbacks towards the 1945 1939 key levels, and if we get deeper pullbacks towards the 1929 500 areas, well and good. Remember, you don't want to simply enter just based on price tapping your key level. You need to drop down to the even lower time frames, which are the 1 minute, then watch price action. So I've realized the 1 minute helps you exert more patience because you don't feel the urge to enter a trade if you simply watch the prices as it approaches your key levels. Okay, so if you have any questions till there about gold and what you're expecting, leave it in the chat before we jump to GJ, which is the yen against British pound.